why I started this podcast, Unconventional Mindset, was really to dive into the minds of people that just think and act differently and how they can break free from the 9 to 5 or the traditional grind. And I just wanted to ask you, someone's going to be listening to this podcast today and they're going to want to listen to what you have to say and they're going to make the decision to change their mindset. What is it that you want to tell them in order to, facilitate them in making that first step and that change?
You have to understand what makes you tick. You have to understand what your personal goals are that are just set out for yourself and not anybody else, and how to distinguish the difference between positive and negative influence. Because we're in a day and an age where our minds are being sabotaged 24/7.
Right.
We're being hijacked. Marketing is on the rise. Influence is on the rise. Our minds are always being up for the challenge. And we have to just take a step back and just realize what our true self is. And that's really hard because we live with so much self-doubt all the time because we're seeing what everybody else is doing in the world, and we're always trying to compare ourselves to others. Even though we might say we're not, we are, even though we don't notice that we are a lot of the time. And it's really hard to be an individual in this world, but that's what you have to do. And you have to realize what it is that you want and set your goals directly for your needs and your family's needs as well.
Did you have a lot of self-doubt growing up? Like, what was that like for you?
Yeah, I think I had a lot of, not so much self-doubt, but I think I had a lot of influence to do things in the image of what I was being portrayed towards. So it's kind of like what you see is what you want. I was in the mindset of, I had a get rich quick mindset.
Right.
And I thought that getting more money, more possessions, more status, that was the career path for me. And I didn't want to have to try to do it fast, but it seemed like that's the route that I took in the beginning. I wanted the shiny things. Yeah. I wanted the status. I wanted all that stuff.
And is that one of those things where you're seeing it like on TV, you're seeing it on the news or whatever? I mean, back before social media, it's like, I just want to be rich and everyone else has the lifestyle. They have the stuff. I want that too. And I want it as fast as I can.
Yeah. I feel like if you want to go very far back to even when we were in high school, it was, you want to go to college, get the job, get the house, get the wife, have the career, retire, and that's what you do, right? It was like you have to get all these things so you can retire successfully. And that was kind of the path, the social path that we were kind of taught. Whether we were taught it directly or indirectly, it was something that was kind of like thrown at, especially here in our culture. Yep. And, and whenever you kind of grow up, and I was always one that was always influenced from people that had businesses that had, nicer stuff. And when you're out and about, when you're meeting people, I've always noticed one thing: when people are being introduced to you, mm-hmm. they're introduced to you, whether it's directly introduced or they're being told to you by somebody else, they're kind of described to you by, he's the person that owns this. He's the person that has this. Oh, he's the guy that has the nice boat, or he's the guy that he runs a business that makes this X amount of money.
Right.
You know what I mean? They're not really saying, oh man, he's a great guy to go and have a drink with.
Yeah.
Or he's a great time, out and about. Yeah. We play golf together. He makes me laugh. What a great
I love
guy.
This guy's values, and he's
it's always about what they have, or it's about what they did. It's not so much about that. And that's something that I have always kind of struck with me, that, hey, this is what people value. They value what you have. They value what you do. And that is something that really kind of got imprinted on me at a young age, that kind of drove my behavior to do a lot of the stuff I did to create wealth.
So we're going to unpack that a little bit here. Yeah. But before we get to that, I think maybe this would be a good time to just tell our audience a little bit more about you, and almost like why you're on the show, because you're all about passive income investing and investing. And I love it. So maybe, just explain kind of where you are right now financially, and then we can walk back from
so there. It's been a long road, but where I'm at now, and I've been here for a while, is that I am a full-time investor. I run my own money fund. It's been focused on income investing. The easiest way to put it is that I invest in the indexes, index funds that prioritize income. So what they are called is covered call ETFs. And the easiest way to describe them is that I invest in the same things that most people invest in: the S&P 500, the NASDAQ, ETFs, index funds, Bitcoin. But my particular products that I invest in, they prioritize income over growth. So the easiest way to put it is that on a monthly schedule, they will spit out a certain dividend to me via what they collect through the cover call strategy. And what the cover call strategy is, it's an option strategy that they are using to write options on the underlying asset to create premiums. And they use this strategy to help be able to pay out dividends from these products. Because before, when you wanted to collect dividends, you had to buy your dividend stocks like your Coca-Cola, your Johnson & Johnson, the big guys. And those guys were only really paying out 4 or 5% dividend at best. So it was the 4% rule was the golden rule. They said you couldn't retire unless you were able to collect 4%. So they said that you needed to have about $4 million to collect 4% to be able to retire. But now these particular products, they're collecting with their premiums, they're paying out anywhere between 10 to 15% dividends. Annually, but on monthly distributions.
Right. Yeah.
The thing people need to understand with these products is that I'm able to invest in the S&P 500. I'm able to invest in the NASDAQ. There's all kinds of great products out there right now I can invest in.
Yeah.
ETFs with 19 to 20 stocks in them. There's a whole slew of products. And this is a strategy that's been introduced about 10 years ago, but really catching traction in the last 5 years, solely due to the FIRE movement.
What is the FIRE movement?
So the FIRE, it stands for Financially Independent Retire Early. However, I don't like the term retire early because it has a notion that you're done, right? Like, okay, you're retired, you play golf, that's the end of it.
That's it, yeah.
It's more about, me and my wife, we rephrased it. It's financially independent, restoring enjoyment.
Oh, okay, I like that.
So that's kind of what we rephrased it at. So, and it's kind of, people are really catching on to this whole rat race that you don't have to be a part of anymore.
Right.
You know what I mean? The 9 to 5, the excessive stressing out to make ends meet. You know, you need to be 65 before you can start to take some time off
and do the things that you want to do.
Do the things that you want to do in life, right? And people are catching on that that's not the social norm anymore. People don't have to follow that trajectory, that path in life.
Right.
So with this particular investing,
can we just hang on a second? Because
Sure.
I have lots of questions.
Sure.
There's lots of stuff to unpack there. And I think we'll get into maybe more individual products and maybe some more strategies later on. In terms of right now, the way you're sitting, can I ask you, what's your portfolio at? And because you're not working out, you full-time invest. So like, how much money do you have as a base? And then how much are you making on a yearly basis?
So where we stand right now, so basically the passive income is about 80% of my portfolio. And so I have about 4 different accounts. I also do strategic active trading within my portfolio. So I basically run like a fund, right, with a few different little strategies, but 80% of it is based on this income strategy. So right now my fund is north of 2 million.
Okay.
And that's bringing in about 28,000 monthly income.
28,000 a month.
So the one thing that really has to be understood with this particular type of investing is that with my assets, when I'm getting my income paid out to me, it's coming out of my net asset value.
Right.
So if I have a business that is worth $2 million and I'm getting 28,000, then I'm getting that 28,000 paid out of my 2 million.
Right.
Right. That's not cash flow. Right. That's where where people get a lot of confused. That's coming out of, but the thing about it is, as long as my business, my net assets are solid and they go up over time, then that income is sustained.
Right. So it's like that's maintaining status quo.
Exactly.
Right.
So that's the thing with this type of investing. So another approach that people take is the growth approach, where they could be just investing in the S&P 500, the NASDAQ, the indexes, or whatever the case may be. And they will let their products grow. They'll let their investments grow, and they will extract the money however they wish. So if they want to say, well, I'm going to wait till I'm 65 to take out that money, then that's what they will do. But however, I don't want to wait till I'm 65 to extract my money. So the best thing about this type of investing is the extraction process.
Right.
So I'm getting paid out monthly income every month from my products, but I'm sacrificing the growth. But however, for my particular strategies, I use 30% of the income to live off of, and I reinvest the rest to keep my foundation solid to keep growing so I can maintain my income to live off of.
Because I was going to say, most people that are just basically passive investing in index funds or what have you, they'll just they'll have the funds and then the dividends will come in and they just reinvest it and purchase more shares. And there's like, I'm not going to touch it till I'm 65, and it grows that way, which is fine.
Yeah.
But from what you're saying is you want to be able to pull out a good chunk of income so you can live the lifestyle that you want to live. But then also you take some of it to reinvest back, so you are still growing your base foundation.
Oh yes, I am at my age. I'm still in growth mode.
Yeah,
I'm 44. I will be in growth mode until I don't want to put a cap on it, but I'd like to say 60, 65. Like I would like to think that I'm going to be. It all depends. It all depends what the market does. Like you have to be flexible. You have to be adaptable.
Yeah.
You know what I mean? Right now, I'm definitely in growth mode for another 10 years without question. You know what I mean? It all depends what the market does. If the market just keeps growing nonstop for the next 10 years, then I'll have to reevaluate. But the beautiful thing about this type of investing is that it's the extraction of the income. So the best way I like to describe it to people is, so if I was invested, I have $2 million invested and I don't touch it, and in 10 years it becomes, because let's say the market's double every 10 years. It's just
something like that. Yeah,
something like that. That's what they say. So, I have 4 million in 10 years, or I have 3 million and I got to spend $1 million along the way up.
Right. Exactly.
You know what I mean?
Yeah,
like that.
Absolutely.
It's like, I don't need 4 million. I don't need 6 million when I'm 65, because I want to enjoy my money now when my energy and my health is at its best, because let's be serious. The older I get, my energy and my health will slowly decline.
Yeah.
And I want to enjoy life right now. I want to enjoy. That's why this investing is getting popular, because we can invest in the things we want to invest in, but we take an income strategy.
Yeah.
Another approach that people can do is they can do their own extracting. They can say, well, I'm just going to sell 1% of my money every month. But what you can do, but the mental anguish that can come with, it's because you're selling it, you're paying capital gains tax every time you're selling things. With this particular thing, we're paying what they call a return of capital, ROC. So it's basically same idea as an RRSP, where we're delaying the capital gains until you sell your underlying asset. So the income that I'm getting spit out to me is pretty much tax-free until I sell my underlying asset.
Really? Okay.
Yeah. But the tax man does come for me. It's more of like delayed capital gains.
Right. Yeah.
You know what I mean? But so if I was to extract money from my growth portfolio, I'd be paying capital gains every time. So it's the same idea as an RRSP, where I'm delaying the capital gains.
Right. Yeah. Exactly. You when you put in money to your RRSP, you're not paying taxes right away, or you get a tax benefit. But once you do draw it out, then
so the
tax man is going to come eventually.
So if I was to sell my assets, or my assets it's another term what they call the ACB. If the ACB went to zero, which means after all the income was spit out of it, there'd be a certain level where I'd have to pay tax on it. The taxes come for you. It's just you can enjoy that income. You can enjoy the income. I can reinvest the income on whatever I want to. I don't have to. If I get my 13% dividend paid out from the S&P, I don't have to reinvest that in the S&P. I could put that income into something more advantageous. Bitcoin's down. I could put it into Bitcoin, which is what I'm particularly doing right now, because Bitcoin's more attractive.
Right.
So you can do whatever you want with the income. How me and my wife have it set up right now is that we use about 30% of it to live and enjoy our life, and then we reinvest about 70 of it right now to keep. Yeah. So we're still in it, which keeps the growth intact.
Yeah. Well, 30% of almost 30 grand. That's like
about 10,000. About 10,000, which is a beautiful.
Plenty.
It's a beautiful income for me and my wife.
Yeah.
We have all our needs met.
Yeah.
And maybe we'll get into it a little bit, but we had to rearrange our life. That was a big change for us to be able to live this lifestyle.
Yeah. Okay. I want to get into that in terms of the lifestyle and the mindset to actually get there. And we'll also talk about tactics too, because I think there was a lot of stuff you were saying there, and a lot of it too was even over my head. So I'm going to have some more questions about that to maybe kind of simplify it a little bit. But in terms of like the mindset, like what did you have to change in your belief system to be able to like say, you know what, I'm going to take the risk and figure out how I can do this investing and like be okay with it? Because I imagine there's also a lot of risk and managing risk as well associated with that. Like you have to have, like, what did you do to your mindset to prepare for that?
I started investing about 8 years ago. And before I started investing, I was very aggressive in my approach to making money. I had the hustler mindset. I used to invest a lot into a lot of, first I started out as a bartender, and I got into a lot of party promoting and investing into events, into music festivals. I also was a personal trainer, and I still practice personal training, but in the wellness industry. And I did try to invest in a few startups in the wellness industry, as well as I had my own business. So I was very active. I was branched out into a lot of different areas. I had a lot on the go.
How much money you were making back then?
I was making like 5,000 to 7,000, give or take, but it was so many different buckets. Like money wasn't coming on a monthly basis.
No consistency.
It was chunks here, chunks there. And that's kind of how I was operated. It was like, getting this bucket going, trying this thing. And
that's tough to do.
Yeah. So I ended up getting a house back in 2006. That was kind of what you were driven towards coming out of school. You got to get a house, right?
Especially here in Canada. I mean, real estate is such a huge part of our GDP.
Yeah.
Which is a whole nother issue
in
itself.
That was the mindset that was really driven into me, is like, you have to get a house. That's how you start building wealth. I never understood the market. I never even knew about the market back then. I mean, I knew about it, but there wasn't any content back then. Nobody was talking about the stock market. It wasn't in my realm of people.
Well, they don't teach it in school. I mean,
no, it wasn't taught in school, and it wasn't. But real estate was something that I was more familiar with. So I got a house, and I went and I rented out every room out of it. You know what I mean? I was collecting income from that. That was a big driver for me. I wasn't paying any, I wasn't costing anything for me to live. So all my money was coming in. I was growing my wealth.
So it's like that classic, I'm going to buy a house and I'm going to just rent it out, and I'm going to get some little bit of cash flow because the tenants are going to be able to pay the mortgage, and then just try to grow that way, right?
I was wired for money when I was young. I was always wired, how can I turn this into income? Like just I was like that since I was a kid. How, you know what I mean? I was like, I worked when I was younger. I was if there was a kid that did the lemonade stand, that was me.
That was you.
Yeah, you know what I mean? Yeah. I was always trying, and I was a very good saver. I was frugal. I never wanted to spend. I always wanted to save. I started saving into a tax-free savings account as soon as it came out, did the automatic withdrawal. That grew. And then just going through those motions for that period of time, and then eventually during a hockey practice or a hockey game, I forget what it was, but somebody was bragging about their cannabis investments.
Oh, okay.
And I was like, I kind of heard them, like, they were kind of like, that's when the cannabis stocks first started getting on the scene.
That's where in Canada, anyways, where they're starting to talk about legalizing marijuana.
It was the chatter about legalizing. This was about 2 years before legalization, and somebody got in super early, and he was kind of bragging about it because they just came on the market and they were kind of doing well. And I got super intrigued, and I mean, it took me 2, maybe 3 days of just doing some research. I was like, this is the next thing. This is what's going to make me. So long story short, I opened up a trading account, went through everything and got everything aligned, moved my tax-free savings account into iTrade through Scotiabank, figured out what were going to be the big marijuana companies, and I put my money in there right away.
Just like that, eh?
I never even hesitated. And sure enough, those stocks ended up, I think I 10x'd my money in 2.5 years.
Yeah.
It was the emotions, the mindset. It
changed everything for you?
You know what? I try to describe this to people like, how that must have been so awesome. And in the moment, it might have been, but it was like, I seen the red flags at an early age. I can see them in hindsight now, because as good as everything did, the emotions of the market really got to me, in the sense of it was never enough. Like I had that, it was never enough, even though I might have 10x'd my money, turned 40,000 into like 500,000 in like 2 years. It might sound sexy, but it was just like, what it created was a monster inside me, for a market monster, because I had a false perception of risk. I had a false perception of wealth, because I said during that time, I was like, okay, I'm going to have $10 million in 5 years, easy, because it happened so fast. And then I experienced volatility. I experienced what sell the news is, which means that after an event like legalization, everybody sells everything off. I didn't understand evaluations. I didn't understand stock price. I just put my money on the table and it just grew, and I thought it was that easy.
Right.
So I had all those gains, a lot of them taken away from me very, very quickly. And the despair that comes and all the emotions that come with something like that. So that was,
it's like you can win fast but lose even faster.
You can lose even faster. And for me, like a lot of people, when you're riding high, you want to double down. You want to put more. I was trying to get everything I could and throw it in there because I thought it was, we're not even in legalization. Like, this is going to get so much bigger, you know what I mean? And I was just so greedy.
And I imagine it's stroking your ego as well too, thinking like, you know what, this is actually easy. And then your first time you do it, it hits and you're like, well, I'm just going to keep doing it. Like, what could go wrong?
Exactly.
I mean, it's like, I understand everything too. But like you said, you probably didn't even know what a profit and loss sheet was, looking at a balance sheet, like looking at the fundamentals of a company and how they're doing. Should I invest in them?
Exactly. And it was, all I knew was that I just was following all the wrong people. You know what I mean? It was, following the media, following the news, following the hearsay. And it's all just, smoke and mirrors. And to jump ahead a little bit farther, after that whole experience of going through the turmoil of the ups and downs, and then COVID came, right? And then COVID crashed the market.
Yep.
And then once that happened, and then I was able to, okay, I'm up, but I can change things from here. So I got away from that industry. I started learning the other aspects of the market, the US market, your blue chips, you know what I mean? And then COVID really was another bag of hammers because that's when we had the stimulus. That's when people were day trading at home because we had nothing else to do.
Yeah.
So I went through my day trading phase.
Okay.
Where I became a day trader. It was, I started a company to day trade through. I opened up in a corporation to do it all through. And I went through that phase for a little while and everything was great. Back up again. Making lots of money. Everybody was making money during that time.
That's the thing. Everyone seems like a genius when the market's going up. Like even right now, the past like 5 months, I have some portfolios are up like 40%. It's like, I'm a genius. It's like, no, you're not. It's just the market.
That's the thing. And you think you can't see that. You cannot see it. You know what I mean? Everybody's envious. Everybody, and it doesn't matter how much you make because you feel like you should have made more. And then we had the rate-induced bear market of 2022 where they were cutting rates or raising rates, sorry. And I did not understand what that meant. I didn't understand economic policy. I didn't understand any of that stuff. So of course, that one was extremely painful because that crash lasted a good part of 10 months. And it was nothing but rips and dips. We come up, we crash down. So anybody that was trying to trade in that environment without any type of experience was getting killed. So I got murdered again.
Yeah.
You know what I mean? And that was the best experience I could have in hindsight because that was the one that set me straight. I was like, either I'm done or I'm going to do this right.
Like all the highs and lows, the mental, I don't know what stress, that would be putting on you of like, oh my God, all my money is riding on this and it's going up and down. I can't take this. A lot of people can't take it.
Without to go into much detail, the stress was unbearable.
Do you want to talk about what's the worst mindset you were in?
That was the worst time of my life because you get on such a high and you base your whole future on the funds that you think you're going to make. You're like, when you're up and you're high like that, you are already spending your future money. You know what I mean? Like you are saying, okay, we're going to have a house in Costa Rica. You're not going to be working very long, sweet love. You know what I mean? We're going to be, this is the way life is going to be because we're already there. Just a couple more years of this and we'll be there. You know what I mean? And one thing I've learned, and this is something that gets really, talked a lot in the financial world and the self-development world is we are always moving the goalposts. You've heard this term. It's like, okay, if it was $1 million, then it's 2 million.
Yep.
If it's 2 million, it's 4 million and exponential from there.
I'll just be happy once I achieve X.
And you think that won't apply to you, but it applies to everybody. And it's contentment is the hardest emotion to grasp. And I don't even know if it's even possible, to be completely honest. I think we could be content in certain aspects of our life, but true contentment, I don't even know if it's a value you want to have. I think you have to have contentment in some aspects of your life because you need to be able to allow places of growth into your life So you can't be content with everything. You can't be content with not growing, but you have to be content with certain things of your life, because you'll get destroyed.
What I'm hearing here is that, you should probably try to think about being content in the things that you do have. Like, I'm happy, I'm thankful for like my family or my health or my job, but yet still have somewhat of a drive left in you to push you to be better than you are today. So something that's like, still, you know what? I'm not as good as I want to be today. So I'm going to do the work that I need to in order to be where I want to be tomorrow.
Yeah.
And sometimes it's okay to want more for certain things. But then I think you got to watch out for things like those negative emotions or like greed or jealousy. Like, you don't want to be driven by those kinds of things.
Greed and envy are the worst emotions, sins that you could possibly go, because they don't even give you any pleasure. Lust and gluttony, at least you get a good meal. Lust, at least you have a good time, right? But envy and greed, they don't give you any benefits. They're just emotions that drive us to do things that we don't need to do. And contentment with your wealth is fine. And I think when I say contentment with wealth, it's not like, okay, this is all the money I need, I don't want any more. It's like, okay, this is enough money for me that I don't need to push the button anymore. I don't need to go out of my comfort zone and put myself in a risky, stressful situation.
Right.
Because some of the best quote I've ever heard is, I will not risk what I have to have more, because I have enough. So I'm not going to put what I have at risk to lose it to have more, because the more is not going to get me there, but losing what I have will destroy me.
Right.
So that is the contentment.
I love that.
That is the contentment that I'm at right now, and I'm trying to maintain it. But it does get to you sometimes when, it always gets, because you always get a little too complacent, and you think, well, if I just could fly first class a little bit more, or, you know what I mean? Maybe we could use the nicer car, you know what I mean? Or, maybe if we did, we had the vacation home down south, and, we wouldn't have to be renting all the time. And that stuff is good, but I would like to have that stuff, but I don't want to sabotage what I have, which is a beautiful, balanced life, to have that. It's not worth sacrificing what I have now.
Yeah. Like, I can imagine, for me, if I had $2 million in my portfolio, whatever, I'd be like over the moon. But yeah, then you can be tempted to be like, okay, well, I'm just going to take $500,000 of that, and I'm going to buy that summer home or whatever in Florida. And then, okay, something happens to the market. There's a big downturn. The portfolio loses a whole bunch of value. All of a sudden now you can't maybe draw out as much from it, or whatever, something happens. Now you're like overextended, and then you could lose everything.
Yeah.
It's like, that's how you get yourself into trouble.
So for me to be able to, so right now, me and my wife if we work or if we do anything, it's for enjoyment. Like I said, I still train a couple clients, pure enjoyment. My wife was a teacher. She teaches 2 days a week right now, and it's a great setup for her. She enjoys doing it. Our independence is our BMW. It's our first class ticket. It's our vacation home. For me to have my 4 hours to myself in the morning to do exactly what I want, and 4 hours to myself at night to be with my wife and be at peace, that is a luxury of life that is priceless. To me, it's priceless. And that's what it is, because you're going through the rat race of trying to stress to have more. It just wasn't, it wasn't working. Like me and you had a conversation about sleep. Sleep is so important. And if my mind is running in circles, I do not get sleep. Having that peace of like, okay, I get to wake up. I get to take life at my own pace. I get to enjoy this coffee. My coffee is about an hour and a half. I read a book, and there's nothing invading my space, and it's pure bliss for me. Talk back about that particular amount, 2 million. That was the amount where me and my wife felt comfortable doing this. We needed to have enough income plus enough to reinvest, because the market will humble us. We will see 20, 30, 40, maybe even 50% drawdowns in the market. That is not out of the question. And where we're at right now, we can survive that. When the markets crash, our income still comes in. We are still getting paid out of our net asset value. That is the beautiful thing. And we will still be okay, because we have enough. Our lifestyle is not our lifestyle is
it's not so extravagant.
It's not extravagant. Yeah. We're not living above our means. So we can survive. But with $1 million, I don't think we'd feel that comfortable, because our income would be not, if we had, it would be, we'd have to only be able to invest 20, 30%. And if we get a market correction, that would hurt. That
It's going to put a little bit of a pinch.
But this was kind of like the thing. This is kind of like the happy spot where we found that we could be comfortable. I want overflow. I want overkill. I want enough room to and the thing about it is that we are long-term investors. We will never sell our assets. We'll die with our assets. That's the beautiful thing. We just keep collecting the income. And I am very confident that the assets that I'm invested in will always go up over time because they have already proven through history that they go up over time.
Well, the market always, look at the market history. Like it's going to.
They survived the Great Depression, the World Wars, financial crisis, the tech boom. We can survive whatever it is. We will prevail. And if they do not survive, then I have a bigger problem on hand than money.
I always say that. Like if the market was to just disappear or whatever, then it's life is completely different. You don't even need money.
Money's not important. Money's not important. It's about, where's the bunkers?
Yeah, exactly. Yeah. I don't know. What do I do with this radiation that's raining down on us? Yeah. Okay. So someone's listening to this. They're convinced. They're like, okay, I would love to be able to get to the point where I can have a couple $1 million in the bank and that's giving me enough dividend payments so I can live the lifestyle that I want to. How do you advise someone to get started and avoid the mistakes that you've made to start building this portfolio? Because I look at that $2 million, I'm like, okay, that's going to take me 20 years I don't have that kind of time. I want to start getting there as quickly as possible. Again, I know we talk about, you got to be patient though. So I know there's not a quick fix, but then how can you start to do something? Like say, for example, I had like $1,000 and I just want to start the process. Maybe it's going to take me 20 years, but so be it. Maybe I'm patient. What do you tell that person?
You invest as much as you can, as consistent as you can, and time is your greatest asset. It's no more. And you want to be able to invest into things that are tried and true, that go up over time. You don't want to speculate into penny stocks, into like risky cryptos. You want to be able to say, okay, it's boring, but it has to be boring. And the only thing that you can do is you can control how much you put into your investments. So if you're starting with $1,000 a month, that's a great starting point. Put that into a calculator and see where that will get you. If you invest $1,000 consistently into the S&P 500 or the NASDAQ and see where that will get you in 10 years. And then put in, okay, what if I put $1,500? Or what if I put $2,000? And that's your trajectory. If you want to get rich quick, the problem with that is you might get lucky. And that's the biggest problem, because if you get lucky, then more than likely is that your mindset is going to be the way my mindset was when I got lucky. And if I wish I didn't take that route. I wish I would have done it a lot differently. But for me and the way I was wired, this was the only route that was going to work for me.
You had to learn those hard lessons yourself.
I had to get smoked.
Yeah.
I had to get smoked, and the best thing that I did was I learned from it. I got smoked twice. Most people would get smoked, get out, never come back. They get smoked twice. Some people just keep getting smoked over and over again until they're wiped out. Except I got smoked twice. I didn't get wiped out. I still kept a good chunk of what I accumulated.
What was the biggest loss that you had in like a short time?
Yeah, I lost 500,000 in the. So I was up to $1 million, and in the when up at COVID, I was up to $1 million, and throughout that thing, I lost 50% of my portfolio, and a lot of it was self-induced. A lot of it was from the emotions of revenge trading, of flip-flopping from this, and then I even started shorting at a portion of time. Right at the time when the market was starting to recover, I decided that I was going to start shorting it. So all those things, and as painful as it was, I came on the other side of it. It took me 3 years to recoup what I lost in 3 months, but I'm on the other side of it now.
You gotta go slow.
You got to go slow, yes.
When I think of investing, and the way I was asking this question was, I'm never the one who's going to go into individual stocks or shorting options, any of that stuff.
Yeah.
For me, my funds are index funds. Like you said, the S&P 500, all I want to do is I just want to be at the market. I think that's what Warren Buffett says for everybody. Just, if you don't know anything about like investing, just do index funding and you'll beat like 89% of all those traders out there. Mm-hmm. My thought process is, I'm going to get some funds. It just tracks the market and then leave it. Would that be what you would recommend to somebody who's new to investing? Like, okay, you're in it for the long game here. Invest in these ETFs, these funds that just track like the index. And there's different variations of that, but in essence, do I have it? Is that kind of what you're thinking?
For the general population, for most people, like you said, the statistics of like, I think it's less than that. I think it's like 5% of the population can actually actively trade, and you know what I mean. The rest fail. Right. So there's another statistic is that if you weren't in the market for the 10 best days of the last 20 years, you've missed like a huge portion, like almost all of the gains.
Like all the gains,
because the most of the gains, they come in these huge up days. These days where there's huge news releases, huge short squeezes, these massive gamma squeezes that come out of nowhere that push the market up 5% a day sometimes.
Yeah.
And if you sold at the bottom, or you capitulated, or you decided that you're just going to take your money and just wait for the best opportunity, you've missed
try to time the market or what.
Yeah, it's the old saying of time in the market beats timing the market. And I was, like, another limiting belief is I was kind of like, whatever, I can make more money doing it my way. I can out trade this market. I was in that zone for a while until you realize that A, it's highly stressful, and B, it doesn't work. Because if I want my portfolio to get from here to here, then it's the route that it's going to take. It's not a straight curve. It takes all these little side roads and these back roads. It's up and down. But eventually it gets there. Yeah. If you think you can catch all the side roads and all the little the ups and downs, it's impossible, because you can't control the news. You can't control the world. Yeah. So that's the thing. You can look at all the charts. You can read all this information. You can follow all these people on Twitter, on YouTube, that telling you what to do. They can't control what happens in the market.
Because a lot of the market is really based on emotions as well. It's not even based on logic. So how the hell are you going to?
So I would say, so what I do, instead of trying to figure out, look at balance sheets, look at charts, trying to figure out how to do it, I take care of my mindset, my emotions. I study Stoic philosophy, because it's not about what I do with my portfolio, it's what I do with my emotions. And you need to be able to withstand the drawdowns, the noise, and all the other farce that comes within the market. And that's the challenge that comes with being a long-term investor. Our job is to hold through volatility. That's the job. That's why it's not easy. That's why people panic, because when the market goes down, not only is it scary, but if you're out there and you're trying to look for a reason why it's down, you're going to get nothing but blood in the streets. The market's going lower. We're done. This is, it's never coming back. And you think, they say buy low, sell high is easy. It's not easy.
Because it's the opposite of what you want to do. What we're evolutionary wired to do.
Like what Warren Buffett said, he says the market is the only store where sales go on and everybody runs out.
Right. Yeah.
And it's true. It's like I think one of my favorite authors, Morgan Housel, says that, the S&P is at all-time highs basically right now. So if the S&P crashed down to 4,000, me and you would be like, wow, that's an opportunity. I want to buy it. But when it gets down to 4,000, it's not going to feel like an opportunity. It's going to feel pretty scary, because whatever got it down there, it's got to be something pretty grim.
Right.
And we're not going to be like, oh my God, like the opportunity of a lifetime. We're going to be like, oh my God, this is scary. Like I don't feel comfortable. That's where the real money is made, by accumulating assets when times are dire. That's where it's at, and it's not easy. So I choose not to even bother with either or. I just stay invested and collect my income.
Exactly.
So that's the easiest thing. And be honest with you, the way the market's been running lately, if I was still in a trader's mindset, I would have been out of the market a long time ago and missed all this appreciation. I swear to God, I would have been, if I was still a trader, I would have been out probably right after the April crash. I probably would have been, just smoked right out of it again.
I have no
and I would never have gotten this massive appreciation.
I want to run something by you here real quick in terms of the ideas that I have for my kids and how this passive income can actually work if you spend the time to stay in the market and be patient. So kids are now, 18 years old. So now they can have tax-free savings account. I put it into a calculator, I think it's $6,000 a year
7.
or whatever. It's 7 now. Yeah. So like $500, $600 a month will get you to that. So I'm like, they're 18 now. If we just get them to put that money into that tax-free savings account,
yes,
in a standard S&P 500, whatever index fund, And you just do the numbers. By doing that alone, by the time they're 60 years old, it's been in there for 40 years. It's like $3-4 million. And that's not even including whatever they would make in their life working or what have you. Like, is that the mindset? Like, you're saying sometimes it's not that easy, but can it be that easy?
It is that easy. That's the mindset. It's like all the best asset of investing is time. That's where, it's compounding is
magic of compound
it's
interest.
magic of compounding, but what it takes is time, right? And anybody that is 18 years old, like you were in the sweetest spot in the world, but they don't be hard for them to realize it. It'd be hard for anybody to realize because for a young person nowadays with the evolution of TikTok, their idea of money is so jaded. They see all these young YouTubers making all this fast money.
Yeah.
I have a nephew of mine, 23 years old, and God love him. He's really interested in investing, and I'm trying to teach him. And then I got the message from the other day. It's like, what do you think of day trading? And I was like, I just said, just don't. He's like, yeah, but it looks like it's pretty fun. I know some people that are doing it. And I was like, we'll talk over Christmas, me and you.
I feel like it's basically gambling.
There's a place for day traders, but you have to know that you're a day trader. I'm not going to throw shade on people that day trade because people are successful at day trading. There's strategies out there that work for people, but it is something where your emotions are challenged 24/7. You have to be a rock. You have to be, you have to have a strict strategy. You have to be in front of that computer every morning, looking at charts, knowing what's going on in the market. I don't want to be attached to the market. I had a really bad attachment with the media and YouTube. And like, I was in front of like CNBC was my jam. I would, breakfast, coffee, CNBC, what's going on? What's the news? What's the action? And then I'd start trading upon all the narratives and everything, right? I was more addicted to the dopamine of trying to make a good trade than actually focused on building wealth.
And like you were saying, also just living that lifestyle that you want to live. It's like, why am I in front of the computer listening to news, getting all worked up or whatever? How's that making me live? How can I spend time with my wife? How can I be peaceful? How can I be present in the moment? You're not.
So there was a moment when it was like a rock bottom moment. Like most people that are addicted to things, they have the rock bottom moments. And I was just like, enough. I got rid of all the YouTubers. I took CNBC off the channel. And I just said, I always wanted to kind of do it. But then I was just like, I have to break free. And throughout that month, I had withdrawals. I had withdrawals from not seeing what I was supposed to be seeing I had habits built in to look at the market every morning, and that's when I realized this is a serious problem. And I got to the other side of it, and right now I can't even look at anybody talk about the markets. People that predict, I won't even listen to them because
they're full of shit.
Well, straight up, because nobody, like, I just don't like predictions in general, weather, sports, especially the market, because, when you really understand the media, and I think the media, we all have our conceptions about the media, right? I think it's all about just clicks and eyeballs. And especially with financial media, they really know how to trigger you. And the people that are on there, they're really kind of just pumping their bags. They're really just trying to get you into what they're in. And by the time they tell you about anything, it's already too late. It's already too late.
Right.
So once I got the media out of my life and I got all the YouTube, so my whole routine is I look at the markets once in the morning, and when I say look, say, oh, okay, nothing crazy going on, and then I leave it. And then at the end of the day, I'll look again. Say, oh, nothing crazy going on. Then nothing, because I'm still somewhat active, right? Because like I said, I still do active trading but I trade the extremes. I don't day trade or even swing trade. It's like if there's an opportunity for me to take a long-term trade, then I take it because I want time on my side.
Getting back to what you were saying about your, it was like your nephew and kind of wanting fast money and all that kind of thing. And today's generation seems to be really all about that kind of lifestyle. Like I can make the money really quick or what have you. Why do the young people not understand this financial literacy? Because like I was just telling you my idea of this is how I could at least set my kids up for never having to worry about money again. And if every kid, $500 a month would do this, then we wouldn't have nobody would be poor anymore in a sense, right? Because everyone would just be investing. Why is this not taught? Why do people not know about this stuff?
Well, I think young kids are definitely learning about the markets because the market is appealing towards the younger generation now. And now with social media, like it's everywhere. You know what I mean? But I think the markets over the last, call it 5 years especially, have turned into casinos. Like you have apps like Robinhood that are now like, if you go into a Robinhood app, it's almost looks like a gambling site.
A lot of things are gamified now.
They're gamified. They're gamified. Like, you know, you can bet on anything. You know, you can. It's becoming like, so there's even these options called zero DTE, zero date of expiration, which means that they expire the same day, which means that you're making one bet for that one day. So it's basically just a straight gamble. And they are getting all the airtime on financial media right now. Okay. Like they're actually talking about it, which really disturbs me.
I've never even heard of this.
Yeah. They're starting to get in popularity. Basically it is, so it's an option. So options have expiration dates. You can buy an option for a week, a month, a year, but these ones are a day. So they expire in one day. So basically you're making a bet just on that one day, which is strictly gambling.
Yeah.
And they're actually talking about this stuff in the media right now. And a lot of people are actually like, you know, getting involved with it, which is very, you know, disconcerting because that's the part of the market that's what the media is starting to talk about. You know what I mean? You know, we went through the meme stock era and with GameStop, and like all this stuff is starting to like creep its way into the market, and it's kind of like turning the market into this, like you said, it's gamifying
this casino. But that's what I mean, right? Like, what is it that we need to do? Like, why is it that they're getting these messages of the gamification of the market? Like, why can't it be slow, boring, safe investment? Index funds.
And I think that
put it in, forget about it.
And I think that knowledge is out there, but that's not sexy. That's the simple, boring approach. And who at a young age can see that? You know what I mean? Like I'm 44 and I'm just starting to see it now.
Right.
You know what I mean? The young kids with TikTok and you know, Instagram, they see this small percentage of people their own age, you know, flexing money that whether they have it or not, they see it, and it creeps into our lives too. It's like that, you know, this whole concept with social media and seeing this false perception of what the world is like and having a false perception of like what being rich is or being wealthy. You know what I mean? It's all about, you know, flexing your car or your new jewelry or your fancy vacation. And that for a young person to deal with, that's tough. I remember when
it's very sexy. It's hard to
I remember
away.
when I was a kid and I seen when I say a kid, I mean when I was, you know, 21 and I seen somebody come with a nice new car. But that was like that was the social media. Like, whoa, how did he get that new car? But that only happened to me once in a while. These kids are seeing it.
It's daily,
all day, all day. So for them to think, well, you know, nobody's telling them on these things, hey, just take your little bit of money, put it in to the S&P 500 every month and watch it compound. So when you're
in 20 years,
I have 20 years.
Like what the hell?
But I can do this in 20 days.
Yeah.
And it's like,
or I could do this one trade here and there. And
so the hope for people is that first of all, they don't fall down that rabbit hole and they have somebody that shows them the true path of what investing really is. And that's the thing for you, for your children, is you can take that step and you could coach them and say, listen, you know, this is how it's going to work. This is what's going to work. Look at this. This is, you know, and maybe sometimes they need to, if they could just see the dark side of what that can bring them, then maybe they could be influenced to stay away from that high flashy money.
Do you think showing people the dark side of what can happen if they, you know, invest poorly or what have you, is that more of a push than showing them the light side?
I think that we should have crap book, shit book instead of Facebook. I think we should have a book that shows all the failures of people so people can understand that, hey, this is real life too. And as harsh as it might sound, you know, because with Facebook and all these things, it's people mostly show.
They only show the highlights.
They're showing the highlights. They're showing, you know, if you're on a vacation, they snap that shot. They're showing that one moment in time that was great. They're not showing the horrible flight, the long waits in the lineup, you know, the dinner that didn't go the way they had planned. They'll show that nice little, you know, selfie from that nice little view, and they'll be like, great trip, best trip ever.
Yeah.
Right. So, and it gives us, you know, and that's what we see. that's why I stay away from social media. And it's not like I'm trying to stay away from it. It's just like the other media. It's just like, I don't like sugar. I stay away from sugar because I just don't like it.
It's same thing with social media.
Same thing with social media. It's not like I'm fighting to stay away from it. It's to the point where it gives me no advantage. I look at it. I feel ill.
Like anything in life, if you use it with intent and purpose and you don't let yourself get sucked into it. Like I use it for business because I have to. I'm on social media and I do it to try to make actual connections with people and engage with it, and also use it to learn. Like if there's something I need to learn, YouTube is fantastic. Like, how do I do this? You can come up with it. But you gotta be very careful to not get sucked into those things. Like it pops up. It's like, you read a thing, it's like, oh yeah, that I get upset. Let's click and watch it. And then you just get riled up, and then you go down the rabbit hole, and you just have to always be fighting.
You're right. It is a tool for business right now, and it's a necessary tool. You have to be able to utilize social media if you're in any type of business endeavor. And that's the thing. Same with the phone. I would love not to have a phone, but I need a phone. You can't even get on a plane anymore without your phone. Sometimes you can't even order a meal without your phone. It's a necessity. It's a tool. Crazy. It's a tool that we need for life. I would love not to have it with me all the time, but I have to figure out ways to micromanage that particular device in my life. Like you said, with social media and business, you have to learn how to make it work for you and not work against you.
Yeah, I have a dumb phone here. I could show it to you later. I tried using it for a bit.
A dumb phone.
Yeah. So it was like a newer phone, but just the old phone, like a flip phone.
Oh, okay.
Yeah. And it just has like, and I went to, so I had it. Now I got a text. It took me like 5 minutes to say like, hello. I'm like, how do we do this? This is crazy.
Yeah. It's hard to admit to ourselves that, there's this big concept of like, oh, I wish I could go back to the 80s or the 70s. Everything was so much better then. It's like, well, I don't want to give away a lot of the luxuries that technology has given to me. It's just I just need to learn how to deal with the backdrops and the dark side of it that comes with it too, because a lot of the advancements that happened, especially with healthcare and a lot of how technology has made our life more efficient, that's stuff that I'm not going to downplay. That stuff is really valuable in life, but you need to learn how to micromanage a lot of the other stuff that comes along with
it. That's a really good point. There's so many, like, I think someone said this before. I think maybe Gary Vee or what have you, but it's like today is the best day to like ever be alive as a human in terms of the technology and everything that we have, the electricity, water, like we have everything we can need. It's easier than ever to do anything you want. But yet, because of that, there are those trade-offs, and you have to be careful to not get sucked into the downfalls of all those technology, because as easy it is to do things now, to do good things, it's just as easy to do bad things.
Yeah, with great power and great advancement comes more trials and tribulations that you have to deal with, right? That's the thing, is the more advanced as we get, especially with AI. I'm very excited about AI. I'm very excited about all the advancements that are, especially with healthcare, in preventative healthcare. But like I said, with what comes with that will also bring new challenges that we have to face too. Yeah. So, with great improvements comes great challenges, and that's where you have to be a little bit stronger. The greater the advancement, the more challenges we have to face. But net, I still think it's a more positive than negative.
For someone that's listening here that they kind of want to get going. They're tired of the grind. They're tired of the 9 to 5, but they don't know how to get started, or they're just really afraid. How would you motivate them to just get going and do what they need to do?
The hardest thing to do is, first of all, you have to get out of the mindset of like, oh, I wasted too much time, because all you got today, you start today.
Like that self-pity.
Self-pity. It's done. Whatever happened in the past, that's over. You start now at any age. And like, for example, my mother is 65. She never invested a day in her life, but she just got a settlement from her grandmother, or my grandmother passing. And now she wants to start investing. I was like, the best day to start investing. She's super excited. She's starting, and she's starting right now, and she's really excited. But whatever you have to do, and the hardest thing to do is you have to live below your means and save, and you have to invest the difference. So if that, pack of cigarettes, or that, whatever vice or whatever something that is not bringing value in your life, is not a necessity, it might be more valuable to save that money and invest it, because your future depends on it. If you're going to live paycheck to paycheck, then that's going to bring a lot of,
tough.
It's tough because the unforeseen circumstances that come in life, where a lot of people, like, there's a lot of stats out there, and I don't know the specific numbers, but a lot of people in society are living paycheck to paycheck.
I think it's huge. I think it's way more than people want to admit.
It's a large number, and I believe that none of them have very much more than a couple thousand in savings. So
if that.
From my experience, anything can come out of left field, especially if you're carrying liabilities in your life. If you have a car, if you have a home, those types of things can really come and haunt you with unnecessary costs. And like I explained to you before, for me and my wife to take this route in life, for us to live off our income, I had to cut out liabilities out of my life. So I got rid of 90% of all my possessions, and we downsized our life. And that was probably the best decision that I think we've ever made. And by selling my house, we were able to fund the rest of our passive portfolio.
What I'm hearing too is you have a house. I mean, there's a lot of equity and a lot of capital that could be just tied into a house.
Yes.
So by selling it, I guess we were in that mindset of like, I'm going to sell my house, sell the car, or sell all these things that I know are not helping me live the life that I want to live. And then you use that capital to help kickstart your fund and to grow that into something that would be able to provide you the finances to live the life you want.
If you have liabilities in your life and they can be liquidated, they can be turned into assets that create you money, that create you wealth. That's what I started realizing. So for case in point, like I had the house back in 2006, and as far as houses go, I feel like it was quite a lemon. And you know what I mean? Like whatever could go wrong with the house, I felt like went wrong with my house. And the money that I dumped into my house, like, a lot of it was in renovations that brought a little bit of value. But if I would have rented and invested the difference and just consistently invested, my wealth would be tripled by now. Say you have a mortgage and you have a rent that are both $2,000, right? Then you have the house that also has phantom costs, which is all the intangibles. And, we all know what they are. So call that another $1,500 or so. So if I was to rent and take that $1,500 and invest the difference instead of just dumping it into phantom costs, right? And then you have to think about all the other expenses, all the maintenance that comes with a house. Everything that starts tallying up throughout the years. If I was to take all that money and put that into investments throughout the year and let that compound.
And even things like property tax as well is a thing too.
You know what I mean? But, and that's what's catching a lot of wind right now, because people are starting to second guess whether they should be getting a house or not.
Well, I think, people are realizing too that they're priced out of the market anyways. Like what's the average house price in Canada? 850,000 or something?
I think 500 is like the lowest.
Is the lowest? Yeah.
Like 550 is like, you're getting like just a basic starter home.
And think about people living, like I can't even afford a house now. Like people living paycheck to paycheck, and they're going to be able to get a mortgage that's going to be like $3,000, $3,500. And where are you going to get the money for the down payment? I don't even know how people are even buying a house. Like the financial situation, I'd love to knock on people's doors and be like, can you just tell me what your financial situation is? I think so many people are probably so under. Like there's some bad times coming.
There's a lot of house poor people out there because like we said before, and I tried talking to some people, because some people are like, oh, we're going to get a house, we're saving a down payment. I was like, I just got out of a house, and these are kind of the things that I had problems with, right? And like they're like, oh well, they don't want to hear it, right? Because it's like they think getting a house. First of all, they think paying rent is for suckers. Like they're like, why would I pay a rent? But they don't think about phantom costs. They don't think about maintenance. They don't think about, man. If I started doing like a mental calculation of how much money I put into my house over the 16 years that created zero value. Yeah. And when I started getting to a certain number, I was like,
it's making you sick. Yeah.
It's like, I'm talking like seeding your lawn, to paving your driveway, to water heaters, appliance fixtures,
and the time even you're taking to do all this kind of stuff, clean the eaves or whatever, and like rake the leaves. And
the only silver lining with the house is that when me and my wife, we moved to Edmonton back in 2014. And I rented it out to some friends of mine while I was gone. And then, because I tried to aggressively sell it, believe it or not, in 2014 for like $285,000, and nobody was biting at it.
In 2014,
In 2014.
What did you pay for it?
So at that time, I paid.
You bought it 2006, right?
We bought it 2006. 2008, sorry, 2008. And I think we paid $235 for it. Okay. So I was trying to sell it for about $285 at that time. Nobody was buying it. So we ended up renting it out. We came back. We got married in 2019. And then, of course, COVID happened. And then properties, they spiked up, right? They hockey stick, basically.
Yeah.
And if I never held on to that house for that long, so I had to hold on to my house for about 14 years to see any type of appreciation on the value. So you have to think my house sat basically like dead when it comes to appreciation for about 10 years. And I had to just hold on to it for that before it started jumping up. And I ended up selling it for $650.
And that's just luck of the timing.
It really was. I mean, it's, you know, it's another concept of time in the market, right? Time, you know, things appreciate over time, but that rate of return is nowhere near what I would have got in the stock market.
Right.
So for example, let's say, you know, I could swear that I probably put close to $350,000 into my house over the course of that time.
Yeah. And for 230 or whatever you paid for it. So it's almost like a break even almost. I
really don't feel like I try not to do the calculations.
Yeah.
But basically I looked at it as a savings account.
Yeah.
Like it basically was just a no interest savings account.
Which is like the worst place to put your money in.
Yeah. But once we got rid of the house, see the thing with the house is that not only was it costing me a lot of money, it made me be a very frugal person. I could not enjoy my money because I never knew when the next hit was going to. I never knew. You know, when a hurricane was coming, I was paranoid. Every time I get up, it'd be like something else is wrong. It could be the little things, and it's all money.
Yeah.
So me and my wife, we had a hard time even enjoying our money. And that was the beauty of this whole transition. When we decided that we were going to make this big leap, it was all about selling the house, taking that money to fully fund our passive investment portfolio, and that we would move to an apartment. We were downsized to one car, and we would live the simple life. So right now we have a fixed income, and what we have after that, it's all pure joy. It's all money that we get to spend without any type of guilt. It's all guilt-free spending. I don't have to worry about anything coming to come and bite me in the butt.
That's the beauty. Once you have, you have your fixed income, you have your fixed expenses, and you have your nest egg, and you have everything that's taken care of, and then you can to be at that point where you can spend the money guilt-free. That's got to feel amazing. And even if it's just $100, that's like, wow, I could enjoy this and not be like, oh shit, I wish I didn't buy that thing because I maybe need the money for something else.
That's the way it was when I was living with the house. I did not know when the next $5,000 hit was going to come to me, so I couldn't even enjoy my money.
Yeah.
And now it took me a little while to get comfortable with the new setup because I had the house for 16 years, moving to an apartment. But after a little while, it was like when we go to a grocery store, it's like whatever you want. Just put it in the cart.
Yeah, like who cares?
You want something? Go to Amazon and get it. It's like just doesn't matter because we don't even hit our target at the end of the month. We usually don't, for what we have to spend.
Yeah,
like it's a beautiful thing because our costs are low. We have zero liabilities, so everything outside of our fixed costs, it's all gravy, baby.
Yeah, I love that.
Yeah,
that's so great to hear. It is so inspiring too because it's one of the things that I want to like right now. What I'm investing in is like myself right now. So like I'm trying to build this business and the money that I'm making is kind of going into the business because that's where I feel like I have the best chance right now to give me the cash flow that I need to be able to start doing more investing into like index funds or what have you. So I love hearing that. And I also love about renting. Like I've never owned a home, and like you, when I was younger, I was like, I have to own a house because if you're not a successful person, if you don't have a house. And I started to realize that just renting, anytime anything would break down, I just call the landlord, they would take care of it. I never have to worry about appliances. I don't have to worry about shoveling snow. I don't have to worry about anything. And I know what my costs are. And it helped me so much in terms of being able to understand where my money was going to be like at the end of the month. So I love that you're talking about having a house is not the be all end all, because I feel like it's pushed so much in our society, especially here again in Canada, where everyone thinks of a house as like, it's not only a place to live, but it's also an investment. I'm like, I feel like houses are liabilities because all they do is take money out of your pocket. So if something takes money out of your pocket, I think what the Rich Dad, Poor Dad, it's like if it takes money out of your pocket, it's a liability, like full stop. And that's what a house does.
With the house, it was almost like a part of our identity. We had people over, they tell us how nice. It was kind of like, it was almost like a status symbol for us.
Yeah,
when we were,
just like the car. Yep.
And so like getting out of that mindset, it was hard at first, but became easy at the end, because eventually you just are fed up with how big of a liability it is. And sometimes it's hard to admit because of sunk cost fallacy, right? That's a hard mindset to get out of, because you put so much money and so much time. And even though I was selling it for what I got for it, I feel like I never recouped any value from it. And selling a house is a complete nightmare.
Oh, I can imagine.
It was the most stressful 6 months of our lives. We had 6 failed offers,
and that's even in a time where it was
where
like a gold
houses
rush.
were, and it was exactly, and it was still such a process. We ended up selling it, but I mean, that I don't, and I can't say that I'll never own property again, because I will entertain anything, but I will go at it and I will decipher whether if I'm going to own an asset or if I'm going to own a liability.
It's a different mindset. Exactly.
It's a different mindset.
You have the right mindset.
I've learned a lot from owning a home. And of course, I'm in a negative mindset about a house right now, but I'm starting to shift. Because time changes. You know what I mean? And if I'm always open to new ideas. I'm not done growing.
Yeah.
Right. So if there's a new opportunity that comes there, I'll come at it with an open mind. But I will decide whether this is going to own me or I'm going to own it.
Right. Yeah. Because I mean, there could be a thing too where it's a nice property, it's a house on the lake, or it's a place that you just like, this is just kind of where I want to settle down, and that's my family, and we're gonna love this place. And you could pay cash for it or whatever. You got to have a place to live at some point, anyways, right?
Yes.
So if it just makes sense to be a house versus an apartment.
Yeah, you have to really do your due diligence on what this house is going to be for you. For example, for people that have a family, you're owning a home not because it's an investment. You're owning a home because you want to have a home to raise your family in.
Yep.
That's the difference. And that's totally valid, and I totally get that.
Yep.
But if you say, I'm going to buy this home because this is going to create me so much wealth in the next 10 years, I don't see that.
Yeah, might not be the best way to go about it. Before we wrap up here, I would like to just talk a little bit about tools and what you use for investing. I mean, I could talk about what I use. I'm very simple, very plain kind of guy when it comes to investing. I have Wealthsimple account, I have Questrade account, and I think that's it. Wealthsimple. I feel like there's another one I'm missing, but Questrade and Wealthsimple. And again, you can open those up. They're completely free, and you just transfer money. You connect your bank account, and you could transfer money like on a monthly basis, and you can I just buy index funds like on a monthly basis, and it just comes out automatically.
Awesome.
So what would you recommend to people getting started?
So I was with Scotia iTrade for basically my whole financial career, just until about 4 months ago, and I transferred to Wealthsimple because Scotia they were not growing with the trends. Wealthsimple is like the new language of money. They get it.
I love it.
You know what I mean? They understand what it's, because investing is daunting. You know what I mean? Like Wealthsimple, they know how to translate things that you understand. So, but the thing about Wealthsimple is that, so when I got away from aggressively trading, I was making so many trades that I was in their top tier within their group, where I was like in like a gold tier,
right?
Where my
because they charge per trade or something.
Yeah,
like that,
I think I was at $4.99 a trade or something like that, which was still getting charged for trades, which is silly compared because a lot of other brokerages don't charge you for trades.
Now you do it for free, which is insane.
So, and then I decided that I wanted to stop actively trading, so my trades went down, and then they sent me a message saying that they were going to bump me up to $10 a trade, and I was like, so I messaged them. I was like, do you see how much money I have with you guys right now? I'm about to pull it out.
Yeah.
If you guys don't treat me any better. So they never got back to me. It was like poor customer service. So I went shopping around and I stumbled upon Wealthsimple. Right off the bat, the most amazing experience in the world. Very, very well educated people that I was talking to. And I was, so basically, and the gravy on top of that was they had a promotion going on to where if you transferred your money, that they would match it 1% for every dollar that you invested with them.
No limit?
No limit.
Oh, so that's a free.
So I moved over my 2 million plus account, and now they're paying me throughout 12 months.
Oh, they're doing installments.
Installments, but they're paying me $20,000 for free just for transferring my money with them. And I'm like, you guys can afford to do this? That is crazy. So like, how much money are you guys making on the back end that you guys are able to match my portfolio at 1%?
And considering that they don't charge you any fees for trading.
No fees for trading.
Yeah.
They are starting to come around a little bit. I'm getting some emails coming from them lately about, hey, we're starting to get a little bit bigger. We're getting, we're starting to charge for this.
They have more products too that are coming out. Yeah.
But the
which
best
is fair enough if that's what they want to, but hopefully they leave it for the layman or the people that are just in the boring investing. Keep that free. Like, I just want to buy, I think ETFs will always be free, but you know what I mean? Just like, I just want to put money into the S&P 500 every month. Keep it simple. Don't charge me.
Wealthsimple's fantastic. It's like I mean, the simple's in the name, right?
Yeah.
It's very simple. There's not a whole lot of like complicated jargon in there.
Yeah.
But but the best thing with me is that when I transferred my money with my net asset value, I was able to get my own personal concierge. So I have my guy that I call for whenever I need anything.
That's awesome.
So whenever I was trying to get a hold of Scotiabank, it was call center,
just
waiting 30, 40 minutes. But this guy, I sent him an email saying, give me a call. And like within like 10, 15 minutes, he's calling me, my guy.
Yeah, that's awesome.
I'm dealing with the same guy.
Yeah, and he knows
time.
you. That's awesome.
And he knows me. He knows my investing style.
Yeah.
I like the direction they're moving into. Wealthsimple is kind of considered the Robinhood of Canada. But I don't think that they're taking the aggressive, pushy gambling side of Robinhood. They're more of like the, younger version, kind of like, promoting themselves to getting more people, younger people investing. They're kind of like the youthful language of money.
I hope they keep it that way too, because if people invest with them and people start making money, then they're going to make money as well too. So hopefully they don't get too greedy with trying to extract as much as they can.
Yeah,
well, it's tough
don't be surprised. Don't be surprised if they do. But as long as they balance it, you know what I mean. Like, you can't knock people for having to take advantage of making money in this world, right?
Yeah.
But as long as they keep their integrity, which I hope they do. But I think Wealthsimple right now, been the biggest. For me, it's the biggest transition I've made that brought me a lot of value. And the other big thing is that, without going into much detail, one of my biggest strategies is that I have a lot of leverage with my account margin, credit that I can borrow against. Just like you have a house, you have a HELOC. I have available margin with my assets. Now, this can be a touchy subject because I don't think people should use margin unless they're very disciplined and sophisticated and have a good handle on what margin is.
And the risks that are
associated with it, right? But within Wealthsimple, their rates are like around 4.3%, which is very attractive to borrow against. And they will let me borrow against Bitcoin, which no other bank or type of like platform would let me do. And that's, Bitcoin's about 25% of my portfolio. So being able to borrow,
that's a good chunk.
It's a chunk.
Right?
Yeah, I'm a firm believer. A firm believer. It's a tricky asset right now, but it's, I want to be 75% equities. And I want to be 25% Bitcoin.
Yeah, we won't get into those details.
Yeah,
I think
for sure.
that will be for another day. I think the real takeaway here is to really get people to start thinking about what they can do today to start that passive investing, passive income generation to set themselves up for success in the future. I think that's the main message.
Yeah, and like I said, it's first of all, you can start right now, and it's like whatever you can afford to invest it. And think about things that you don't need in your life. If something's not bringing you value, cut it out and invest the difference. It's not going to work right now, but over time it will grow. And it doesn't matter. It doesn't have to be $1 million. It could be $50,000. It doesn't have to be this big extravagant number. Just start right now. Like, you don't need to have, like, for me, this is my dream wealth. You know what I mean? More is great, but it's not necessary.
Yep.
But this is where, I've always had these wild numbers in my mind, like 10 million, when things were going great. It was, the goalpost is always moving. But for me to just take back and be like, if I sold the house and I could pull everything out right now, we have enough. And me and my wife had to have this serious conversation. We have enough to make it work. And we don't have to stress anymore. Yeah. We just have to do the hard thing and say, this is enough. And we did. And this was accumulation of me working since I was 19 years old, saving, working, putting it away. I did it in a very unorthodox way, but it still worked out. It's my path.
Yep.
If I could go back and change things, I would do things differently. Of course I would do things differently because I know the difference.
Right.
But my path is my path. And the only thing that I can really hold my head high about is I made mistakes and I learned from them.
And you could put that out there in the world as well too, so people can hear about your mistakes and maybe hopefully avoid them as well.
Yeah,
too,
I was destined to make mistakes because I came out of the womb a greedy little boy,
Yeah.
And it's like, you know what I mean? I was wearing the green eyeshadow. I wanted the rich and the rich and the fame and all that stuff. Status is a hard one. You don't realize how much you think money creates status. And I think that all gets rolled in with greed, right?
Yeah.
And then when you can really just throw that to the side and realize that that's not a value, and you got to realize nobody really cares about what you have. It's just all in your head. Nobody really focuses on you as much as you focus on you.
Right.
You think everybody's watching you? You think everybody's talking about you? No. So it's like you really, we're only here for a certain amount of time, and I don't want to waste my time stressing out trying to accumulate wealth and status that is not going to do anything for me in the future, because all I want right now is my peace of mind, time with my family, time to do whatever it is that I want to do. Independence is the number one value that I want in life, and that's what this investing gives me.
I can't think of a better place to end that conversation, because what a beautiful message. I love it, and that's exactly what we're all about here at Unconventional Mindset. Luke, thank you so much for joining. It was an absolute pleasure talking to you.
It's been a great conversation. Thank you.